Hello and welcome to Business Incorporated Live on Channels Television. It's a brand new trading month. Hope it's looking good already. Here's what's coming up. African startups raised just $102 million in July, the lowest monthly funding total since March 2025. South Africa's manufacturing sector lost momentum in July as business confidence weakened. And oil prices tumbled after President Trump reportedly called off a planned attack on Iran. And it's great to have you join us. First off, let's kick off with what's playing out with the markets, starting with oil now. We're seeing oil prices have slumped more than 6% in Asian trading today, falling to their lowest levels in 3 weeks, as U.S. President Donald Trump said negotiations with Iran would resume later in the day after he called off a planned attack on the country. I've already seen the impact right there. Definitely that's great, a great picture when you're looking at the pump price of fuel, 6.05% lower for WTI. Brent crude, that's down about 4.72%. Natural gas holding up though, $2.76, up 0.55%. Let's flip over to other parts of the market now. Gold prices rose today as oil prices retreated following the fresh de-escalation in the Middle East. Now we see it's mostly gold, spot silver, copper. After a good month, that's in the month of July. It was great for gold and silver, both rising for the month of July. $4,108 today, just about 2 basis points kicking off this new trading month. Spot silver up 0.70%, a bigger move, but we see the laggards there. Palladium, platinum, down by about 0.4%, both there, 0.4%. 0.89% higher for copper at $6.52 per pound. So that's a picture right there for the metals market. We're still keeping our eyes on these markets for this first trading week of August and first trading day. Let's flip over to other stories now. Let's look at funding. Africa's startup funding, that slowed sharply in July, despite a steady pace of investment activity. According to the Big Deal Africa, 44 startups announced funding rounds of $100,000 or more, raising a combined $102 million during the month there. That's funding raised in the month of July. Funding rounds about 100,000 plus only, and we had this actually excludes exits at this point. But another interesting thing, data there is most of the funding was more of debt over equity. So we see that debt funding there exceeded equity funding, and that's for the month of July. So yeah, excludes exits. That's the latest one there. We keep tracking data coming out from Big Deal, showing us how most of these startups are raising funding right there. Moving over now, South Africa's manufacturing sentiment that waned in July. We saw it lost momentum. That's the sector. Challenges, from Africa's most industrialized economy. The latest APSA Purchasing Managers Index showed business confidence weakened, softer demand, fewer new orders, and persistent uncertainty that weighed on factory activity. The data highlights the difficult operating environment facing manufacturers, despite easing inputs costs and hopes for a broader economic recovery. Flipping back to the oil market, Nigeria-focused producer Sahara Upstream has deployed a new 380,000 barrel tanker to support crude exports from the OML-18 oil block, marking another investment aimed at boosting the country's oil production. The company says the vessel will cut loading turnaround times from 30 to 48 hours and help increase exports from the block by 50% as it targets the production growth from 36,000 barrels per day to 60,000 barrels per day. And in Tanzania, you see Tanzania and the United States have agreed to strengthen their strategic partnership following high-level talks in Dar es Salaam. Discussions covered trade, investment, defense, and regional security, with both sides also agreeing to revisit Tanzania's concerns over U.S. visa restrictions affecting its citizens. The meeting brought together, senior Tanzanian ministers and a U.S. congressional delegation led by Congressman Ronnie Jackson, underscoring efforts to deepen bilateral ties. Most of the top stories today. We see the International Monetary Fund, they've approved $1.77 billion in fresh financing for Egypt after completing key program reviews. The IMF raised Cairo's economic reforms but urged the government to accelerate privatization and reduce the state's role in the economy to boost private sector investment and strengthen long-term growth. And we see also back to Nigeria. Nigeria regulator says about 43 insurers met new capital rules. That's for the insurance recapitalization drive. That's gathered momentum so far. With the industry regulator saying 43 insurance and reinsurance companies have met the new minimum capital requirements. The exercise is expected to inject about 600 billion naira into the sector, strengthening insurance financial capacity and resilience. And to other stories now. Odwa Investment inaugurates a new chairman. They've inaugurated Dr. Tajuddin Tola Kasali as its new group chairman, completing a leadership transition designed to reinforce, corporate governance and institutional continuity. Dr. Kasali succeeds Otumba Bimbo Ashiru, whose 4-year tenure ended under the company's rotational chairmanship policy. Among the 6 Southwest shareholder states, the new chairman says his immediate focus is implementing the SRC 2.0 strategy for 2026 to 2030, targeting 30 billion naira in profit before tax, 1 trillion naira in total assets, and 50 billion in group revenue by 2030. So that's the latest one right there. We'll keep our eyes on that. We'll also find out what's happening in the markets at this point. Definitely is a new trading month. As the trading month of August, a lot has happened in July. From the month of July, giving us about over 6% gain. That's for the whole month of July there. But we'll see trading on the continent there. NGX, that's up about 0.19%. It's going really good there. 245,000 to start off this trading month. And we did see First Holdco cross 6 trillion market cap. Crossed that today. It gained about 5%. If you can put that up for me, we'll see First Holdco there giving us new headlines to kick off this new trading month there. Yeah, there you have it, above 6 trillion. That's the market cap there. The intraday share price trading has been trading between 129 to 137 naira per share. Previous close was 125. So there you have it. Another headline from First Holdco to kick off this trading month. Hit the 6 trillion market cap. That's a historic first right there. All right, let's unpack what's played out so far and what to expect in this trading month. Joining me now, we have Taufik Zubair, Senior Investment Research Analyst at Pathway Asset Management Limited. He joins me right here in the studio. Great to have you, Zubair. So it's another trading month, definitely July. That's gone now, but it did leave us with some profit there of over 6%. Talk to me about what's played out. But first, before we go into that, we did get some data from the Central Bank of Nigeria. So there is, we have their financials, at this point, telling us, what the bank, operating surplus, what happened in 2025. 86.81 billion naira. I would say a growth of about 47.6% year on year. Total assets, 138.66 trillion. Total liabilities, 137 trillion naira, outpacing total assets. Total equity, 1.22 trillion. So looking at this now, this from Central Bank of Nigeria, what is this telling us so far, in your opinion?
Yeah, thank you for having me on the show once more. Good afternoon to you. So looking at the data, so we have seen the reports from the Central Bank, and they have delivered on the core mandate, which is to stabilize the monetary policy environment and ensure that we have a robust banking framework. Now, when we look at the data and look straight into the financials, we see that the balance sheet, especially from the reserve side, has increased. So the balance sheet now, we have over $52 billion in reserve. But one thing that is interesting is to look at the liability side. Now, what is driving it? Is it sustainable? Is it something that we need to also look at the the other side of the equation, which is the real sector, to know how can we make progress from this particular position, because what we have seen with the number is only short step. So until we kickstart a strong investment cycle that will allow us to have a mixture of long-term capital in the system beyond the foreign portfolio investment. So we need to start seeing significant inflow of foreign direct investment so that the development can become sustainable.
Right, but looking at what played out in 2025, does this give us confidence coming into 2026, in your opinion?
Yes,
looking at this
definitely. So the monetary policy, what they have to do, they have exhausted the tools they have at their disposal, which is to make the interest rate environment friendly, just so that we are competitive on the global scale that can attract funds into the country. That is where we need the fiscal side to address the issues we are having in the real sector, which is elevated inflation. So government policy needs to align. So we need to start seeing significant improvements with security, just so that we can start having confidence from the business environments that will attract foreign direct investors into the company.
All right, now talking about investor confidence, let's review some of the top happenings that's for the month of July in the markets. Now, we see the best performing stocks in July. Fortis Global, that gained 136.36% there, about 234. First Holdco, that was for the trading month of July, 131% rise there. Quite, I don't know if anyone expected First Holdco to rise 131% in July.
So looking at what we have seen with the profit more than 100% in First Holdco, so I would like to unpack the markets by giving a little bit of macro. Looking at what we have seen due to the energy issues we have seen in the Strait of Hormuz, so the banking sectors and other financial services sector look very attractive, because it means elevated inflation is still going to be with us throughout the rest of the year. So capital is expected to flow into the financial services sector, though we did not see that coming with First Holdco, because we saw that the chairman was buying into that stock aggressively. But after everything, we're able to see a circular that going forward, we should be expecting 60% dividend payout ratio, meaning whatever profit they make, they are going to be paying 60% to investor, and that is very interesting and juicy. And when you look at the banking sector again, if you look at I would like to backtrack a little bit to the data we just discussed around the CBN reports. So we realized that majority of the money that bank lent out went into the oil and gas sector. Now, oil is trading at premium, meaning those companies will be able to pay back the loans that they are owing to bank, which bank has already written off. So we saw that with First Holdco. First Holdco was able to recover over $70 billion from its non-performing loan. So it means they are going to be in the money, and that is the major driver of the reports that we receive for H1.
Right.
So definitely, it's expected to split into other banking stocks going forward, because we expect them to recover the non-performing loans that they have provided for in 2025.
I guess we're going to keep our eyes on the banks, at this point, I guess for this month of August. Let's flip over now. Let's see the laggards of July. Mature Industries for the whole trading month down 40.78%. Make the calls 32.35%. It's National Energy Insurance there. That was down about 28.32%. So those are the laggards there. So as a smart investor, what do you do? Seeing the big performance in July and the laggards, what do you do with this information going into this month of August?
So going into the month of August, we need to be cautious, because the indicator, most of the moves we've seen in July was on the back of the Q2 reports that we are expecting. Now, most of these reports has been reviewed, so we expect profit taking to happen in the short term. So while profit taking is happening, it is best to sit back and look at the leading indicator, which is going to be the macro. Try to understand where inflation number is going, and we've known that energy price is escalating, meaning we are going to be seeing inflation going upward, and probably yield is going to follow suit. So it means investors need to look at the macro to know what the leading indicator should be and how it's going to benefit the stocks listed on the exchange. So like I mentioned, the financial services sector is one, and when we look at other sectors like the industrial goods too is another one, because we've seen good numbers. So to wrap it up, investors should look at the numbers, allow profit taking to happen, and position as a very good entry position.
Right, and I'm sure some of these investors already, holding some stocks, right now. Is it time to start to reduce, or do you just hold and maybe add more positions on the dips, or what do you think is best strategy?
So if you have already taken position, so what you need to do is to consolidate your holdings by allowing the market to take profit a little, then accumulate when the valuation look very attractive. Because looking at the third quarter and the fourth quarter of 2026, the market still has potential to rally, because we are expecting the Dangote refinery to list. And again, we are also seeing some major indicators. We are getting interest from the foreign, we are getting foreign interest, especially from FTSE Russell. They are trying to reclassify Nigerian markets to the frontier market. So by the time we start seeing those positive indicators, it is going to bring liquidity into the market, and those people that have positioned will be the ones to benefit from the
right.
liquidity.
I guess a lot to unpack at this point, and I guess you would like to see another bullish month, coming from July, into August, but who knows? The market does what it wants to do. Thank you so much, Taufik Subair, Senior Investment Research Analyst, Pathway Asset Management Limited. Thank you for coming on the show today.
Thanks for having me.
Fantastic. Yeah. All right, so now let's piggyback now. Let's see what's played out so far. That's for all the markets that we track now. So we see the likes of the Middle Eastern markets, markets in the U.S., Asia. We're seeing them also trying to, get direction in this, new trading month there. See the in the UAE, 1.08% higher for the Dubai index. The Abu Dhabi index, that's about 3 basis points higher at intraday. Flip over to other parts now. We see for the Tadawul, strongly up 0.82%. Qatari index 0.83% higher, and this is, despite the big drop there we're seeing in the oil market. Let's flip over now. Let's see what's happening for all the markets that we track now. We see for Asia markets, big drop there for the Kospi. Yeah, I did track that earlier this morning, but it's 5.12% to close. The Hang Seng Index, that was up 0.48%. Other parts of the market now, see the Nifty 50 trying to make a comeback there, 1.60% higher, 24,774 points. Let's see U.S. futures now. Yes, it's mostly green there for U.S. futures. We're seeing de-escalation, and that's helping prop up, the futures market there, 0.47% higher for the tech-heavy NASDAQ. The Dow Jones Industrial Average, the outperformer, that's for the futures market, 53,056 points. Let's see the color in Europe now. Let's see what's happening over there. We have Lars Holter over in Europe. How's it looking, Lars? Happy New Month, Happy New Week.
How you doing, Lottie? It's good to be with you. Well, I can tell you European markets are starting the new week in the green. It's not entirely surprising, of course, as the oil price, of course, is down a bit over those latest developments there. And when the oil price goes down, markets go up, of course, but we both know, Lottie, that it's the other way around as well. So now we have all the European indices up right now, about 0.5% for Spain, more than 1%, almost 1.5% even for Germany. DAX in Frankfurt being currently the strongest performer on the continent, but that's also because we got some, let's say, decent data with a stronger than expected purchase manager index, and we're also seeing some good news out of retail. All in all, it's good for this pretty friendly opening this Monday.
Yeah, time to get the private sector indicator over there. But let's flip over to other matters now. The European auto sector, that's been struggling for years as Chinese companies have taken over, market share. And while some countries like Germany try to fight back, others are embracing the situation. For instance, Spain, Ford and China's Geely have formed a joint venture to produce cars. Tell us about this one.
Yeah, we're talking about a joint venture here for a Ford plant in the town of Valencia, where they're currently producing the mid-size Kuga SUV, but they're not producing many of them anymore. In fact, over the years, the Ford plant there fell more and more below its capacity, jobs were cut, and its future wasn't entirely clear. So that's a story we've been talking about for many of the European car plants in the last couple of years. And now with that cooperation with Geely, they're expecting actually to bring this plant back to full capacity, as Geely's plan is to produce at least half of the cars that they're selling in Europe, actually in Europe. Now, as for what they're making there, of course, there would be hybrid and fully electric cars, because that's what the Chinese do best. Now, what's really interesting, Geely is not the only Chinese brand here moving into Spain. Leap Motor is working on a project with Stellantis in Zaragoza. BAIC is working with an off-road brand called Santana in Andalusia. And SAIC, another brand here out of China, is planning to build its own plant in Spain in the Galicia region. So the Chinese firms are really making Spain their hub for Europe.
So what makes Spain so interesting for these Chinese companies?
Well, there's lots of reasons, Ladi. First of all, by manufacturing in Europe, Chinese automakers can circumvent the punitive tariffs on Chinese electric vehicles, and they meet EU requirements that parts of production have to take place within Europe. Also, they feel they just need to have a stronger presence in Europe, because it's clearly now their biggest foreign market. And then looking in particular, of course, at Spain, labor costs there are much lower than they are in other Western European countries. There's great conditions in Spain for renewable energy to power the plants. And then finally, and that's of course a very important point, Spain has lots of ports for easy export of cars to Africa and to South America.
Yeah, so much to unpack there if you're trying to set up a production, plan. But what is China, making inroads into Europe? What does that mean for the car makers there?
Well, yeah, that's the big question, Ladi. And there are two answers you're currently getting from people in the business. On the one side, some are saying that cooperating with the Chinese is simply a pragmatic decision to save the auto industry in Europe that has obviously seen some hard times in recent years. And with all the job cuts and plant closures, with China producing here, they say jobs can come back. However, others are warning that Europe is on its way to becoming China's manufacturing hub, entirely reversing the situation that we've had for decades, when European companies led world markets with products designed and engineered here in Europe and then manufactured in China. Also, some are warning that while the Chinese have gained knowledge from manufacturing for European companies, it might not happen the other way around, because China is flying in top engineers to run the plants here, and any knowledge transfer could be limited at best. Some are even calling this whole thing a Trojan horse, with the Chinese entering the markets here, seemingly helping struggling businesses, but in fact then taking over European markets and eventually sidelining European companies and brands entirely.
Yeah, auto industry, they're so sensitive. Thank you so much, Lars. I'll see you again tomorrow.
Yeah, thank you, Ladi.
All right, let's go checking out what's happening with digital assets. We're seeing Bitcoin. Let's see, before we look at what's happened or happening today, let's see the performance for the month of July for digital assets, the likes of Bitcoin, Ethereum. So we see for the month, that's talking about Bitcoin and Ethereum. For the month, Bitcoin is up about 4%. That's for July. That's the trading month of July. Then we did see the Ethereum there with double-digit gain, about 18%. That's for the whole trading month of July. Talking about Bitcoin, Ethereum, XRP, and some of those other cryptocurrencies also, looking good for July. So it's a good trading month there for Bitcoin and if my producer can put that up at this point. All right, let's move over now. Let's see, some of the headlines there. Cryptocurrency industry is intensifying its push for clearer regulation in the United States as a new poll shows growing public support for the proposed Clarity Act. Industry leaders say the bill will strengthen consumer protection, boost investor confidence, and provide the regulatory certainty needed to drive innovation and expand the digital asset market. And a security flaw affecting the cold card hardware wallet is renewing calls for stronger independent audits across the crypto industry. Kraken's chief security officer says the incident highlights the need for regular third-party security reviews to identify vulnerabilities before products reach users, and strengthen trust in digital asset storage solutions. Now, we see the U.S. Securities and Exchange Commission, they're delaying a decision on NASDAQ's proposal to list options tied to its Bitcoin index. The move follows concerns raised by CME Group over potential market overlap and regulatory issues. All right, there you have it. Bitcoin for the trading month of July, 4.77% gain. There we see Ethereum, a big 19.20% gain there, and this is despite all of the risk-off, risk-on sentiment that we did see in the month of July. So coming into August, we'll see if that continues. But the first trading day, we're already seeing some profit taken there for Bitcoin, 0.65% on the back of the issues there with security issues around one of the cold wallets there. BNB holding up 1% up, Hype 52, the 2.41% higher, but it's mostly red right there. So that's how the first trading day of August, that's how it's looking right now. Keep it here so we'll give you more updates so you get direction on what to do. Remember, the plan is to buy low and sell high. I'm Ladi Williams. Bye for now.